Welcome to Disruption Blueprint with Shannon Spotswood from RFG Advisory. In this podcast, we help advisors grow their net worth, build their businesses, and maximize their independence. We've built an award-winning platform with innovative technology, comprehensive service, and a team of individuals who are experts in their field to serve advisors. Join us for this journey where we explore everything that has to do with running an independent advisor practice as we bring together successful advisors, industry experts, and innovative minds who are on the bleeding edge to challenge the status quo, foster new ideas, and create a path for advisors to unleash their growth potential. Now, on to the show.
David, it is so great to be with you in a remote location,
right?
Beautiful sunny Florida for our advisor retreat. Welcome to Disruption Blueprint.
Thank you for having me, Shannon. I'm really happy to be here. It's my first event retreat with RFG since we joined last June. And
what do you think so far?
So far, it's been fantastic. I'm real excited about the FP Alpha thing because the potential there, from my perspective, we're already doing what they're doing, but it's time consuming as hell. Yeah. And what I saw was, oh shit, I can really scale up. Now we can really move this out to more clients, do more with it, and make the job easier prepping for these meetings. So I was excited about that. Obviously, I'm big into energy and diet and health and all that. So the lady, I can't think of her name.
Olivia Hales.
Yes, I thought she did a really nice job talking about it. It was a real brief overview, but I'm looking forward to maybe going home and going through that book. It'll be fun.
Absolutely.
As a take-home getaway. So anyway, so far so good. And the marketing this morning, obviously marketing's top of mind for me, and I know you're going to ask me questions about that. So, that's something that is keen in my mind right now in terms of continuing the growth and providing a great succession opportunity for my team when I do step back. So, well, I'm step back a little bit. Not all.
I was so glad to hear you say that because we really try with the advisor retreat to create something that's really special and thoughtfully designed for impact for advisors. Like this isn't, you're a sponsor, you automatically get a speaking spot, talk about whatever you want to talk about. It's like, no, education in the morning is all about your practice. Evening programming is all about your person. But the reality of it is you got to weave those two things together to really have the high profit, high happiness that we're all seeking.
Absolutely. That's what it's all about.
Okay, so you've basically in just over a decade, which I love the fact that you have a chapter before you became an advisor, and over a decade, you've built this really vibrant practice. You spent 2 years doing due diligence. You were independent, but really 2 years thinking about what's the next iteration of independence, how you wanted to be set up for your eventual succession plan. And in the end, you transitioned after 2 years of due diligence in June of 2022.
Yeah, it wasn't the perfect time for the
which is, literally one of the most stressful. I've always said, I'm like, you're going to win the award for like most volatile, most stressful times to transition. And it was a success. Like you guys really, you buckled down, your clients came with you. It went as planned against and what's so interesting about it to me is that you can plan and due diligence, and in the end, you can't control all the variables. And here you were in the teeth of volatility making the transition. So what is your advice for advisors who either are in a captive environment thinking about independence or are independent but want more? They want more control and more independence.
Well, if most advisors are in the business, as I left the corporate world to become an advisor, to be an entrepreneur and really help people, and to feel like, on a daily basis, I was able to give to people and really help them in a lot of different ways. So if you're in a captive scenario, you're real limited in what you can do. Yeah, maybe a little bit here, a little bit. You're limited. You're not able to bring your personal touch, what you can really provide to clients to bear if you're sitting out there as a captive scenario, or even associated in my mind with a broker-dealer, because let's face it, broker-dealers push product.
Right.
They push concept and they push product. I mean, I was brainwashed into thinking that annuities and alternative investments were part of what you had to do, and that was part of the business, and that, it didn't work without it. Well, that's not true.
Right.
Those products actually have a lot of pitfalls, a lot of costs, really good for the companies pushing the products and the broker-dealer.
Yeah.
Not necessarily great in every case for the client. There might be some situations where they fit, and annuities do have good income benefits. There's some things out there, but the real push, is going to be is not going to be necessarily what you doing the best thing for your client. So by being independent, and my affiliation with RFG was we thought it out a whole lot, because I could have just gone straight RIA myself on a standalone basis. But with you guys having already done so much, and actually you were ahead of the BDs, in my opinion, you're ahead of the BDs in terms of your tech set. Your tech stack is, I still think, the best I've seen. That had a lot to do with our decision. And it also provided the greatest opportunity for my team to be able to scale up, do things they hadn't been able to do before, make it easier for them to serve our clients, make it easier for all of us to serve the clients, which I believe is what's been happening in the past year. It's not been quite a year yet, and we're already reaping the benefits. We've brought on clients now with single signatures. Oh my God, what a difference! Having to, from the broker-dealer world, you had all this paperwork for every single account. Now, they're already with Fidelity or they're already with Schwab. They just sign a piece of paper and they're your client and you're managing the assets. That's like, what?
Life-changing.
Oh, yeah, it's like life-changing. It really is. And I joke, I say sometimes, too, the other side of that equation, I haven't had to do this yet, but if I do, it's sort of nice to know that I could actually turn off a client. If they weren't listening to us and they wanted us to do something that I didn't agree with, I could say, you know what, you want to do that? Click.
Yep.
Go ahead.
To retail.
Go to retail. You're now retail. Do it yourself.
Right.
That kind of control and power, in a sense,
Yeah.
Really makes a difference in the advisory world and opens the door for a lot of potential growth and opportunities for the firm and for my team. And that's really what I'm thinking about now. Is, how is the team going to make this work? How do we scale up? How do we get bigger and better so that there's an opportunity when I step back for everybody to continue to grow and do well?
Well, and that's part of what I love about your mindset. Like, you got through the transition, through 2022, the volatility, all the rest of it, and you came into 2023 really anchored on that. Like, what can I do to help position the firm in a really successful way for an eventual succession, game plan? And a big part of that, for 2023 is you're making this significant investment in marketing. You're planning on investing upwards of 5% of annualized revenue in radio, in social media, in events. So you've adopted this mindset around like go big or go home. And it's oftentimes, I think, advisors, you've already got a very large, very successful practice, wouldn't necessarily hit the accelerator, be like, no, we're going to go even bigger. We're going to invest even more. So why did you make that decision? Why did you decide now is the time?
Well, I built my practice through teaching educational seminars. That's how I built the practice. I spent, the first 10 years of my practice, that's really what I did, almost exclusively from a marketing standpoint. And I did spend marketing dollars. So it wasn't a huge amount of money, but I certainly spent marketing dollars to grow the business. And, of course, that's just me teaching classes.
Yeah.
That's not the building the brand. That's not the firm. That's not that's not all we do, And COVID hit.
Yeah.
Okay. So classes went away. Couldn't do it in person.
Dismissed.
Yeah. Class dismissed. Couldn't do that. And really, and when I started to go back into the classes, they didn't seem to be as viable. In other words, and I also started thinking about, from a succession standpoint, there's nobody on my team that's going to be able to come in and teach these classes. So I said, well, what else can we do? We need to do something else, something that will survive a COVID type event.
Yeah.
Something that we can build on and has lots of arms and lots of touch points for clients and for prospective clients. We want to reach out and build the brand name of the firm up so that when I'm not there, the firm is going to be able to pay me. That's part of it. To be able to take care of me when I'm gone. But also, they're going to have a steady stream of new clients coming in from what we put in place. And that's a combination of doing podcasts. It's a combination of doing marketing, both on social media, and I'm planning on doing a radio program as well. And yes, I'm going to spend some money. But, I was thinking this morning, it's sort of funny. A lot of people think about ROI, return on investment, with marketing. But, we're advisors.
Right.
Okay? So when we get a client, what's a client worth?
Right.
So a client, let's say they got $1 million.
Yeah.
That's roughly $10,000 in revenue per year.
Yeah.
For a firm.
Right.
Forever. Right. Not this year.
Right. Not
but
one
next
time.
year, the following year,
Yeah.
the following year. So one client can pay for a lot of marketing potentially when you think about it that way.
Right.
And so
it's this whole notion, and our industry has never really done a great job of customer acquisition cost, which is commonplace everywhere else.
Right. And when I really started doing what I was doing, I'll be honest, Robbie, my wife, she didn't like me spending all that money on those classes, because I had to promote the classes and show up. I actually started out doing dinner seminars originally and then switched to the classes. But, promoting it, getting them out, that was expensive. And she was like, and then sometimes I wouldn't hardly get anybody out of the class, maybe one or two clients or something. I said, look, you have to understand, we got 2 clients out of that.
Right.
Okay. One of them has $3 million invested with us now. That is a lot of revenue for us every year, as long as we do a good job and keep that client, which, by the way, I rarely ever lose a client. It's usually, if I do, it's because they're working with the brother or the sister or the brother-in-law or something like that. Yeah. It's pretty unusual for us to lose a client. And most advisors are like that. If you're doing a good job, you don't lose your client. So what's the ROI? I said, look, we don't even have to, they paid for all of our marketing for this year and next year and the following year. just those 2 clients. So it's a way to think about it differently. And so I never minded spending money on marketing because I understood that long-term payback from an ROI perspective on your marketing dollar.
I mean, that's going to be the drop the mic moment of this podcast, because I think so many advisors instead get fixated on, I'm going to spend, $500 a month, or I'm going to spend, these minuscule amounts. I'm going to turn on, it's Baywatch. Where's Pamela Anderson when you need her?
That's
Baywatch,
definitely
just rolling by. I love it.
That was definitely a
Coast
Guard helicopter.
It was a beach moment with the Coast Guard going by. But I'm so glad to hear you say that, because I think it's really helpful for advisors to hear. It's almost giving them permission to invest in their business. You cannot expect to build a large and thriving practice by not really saying, I'm going to, you're an entrepreneur. What do entrepreneurs do all day long? Take risk, manage their business, invest in their people, invest in their business.
Yeah. And so many advisors start out thinking that they've got to sell their friends and family.
Right.
And that's, I was a corporate executive for years. I moved back to the Richmond area from having lived and traveled all over the country.
Right.
I didn't know anybody there.
Right.
So I did have family, but, they were all spread out, and they certainly weren't. Well. Anyway,
right.
They're not going to build a business that way with just your family. That's for sure. So I needed a way to reach a lot of people, and one of the things that I started out in this industry over 40 years ago as a college agent for Northwestern Mutual Life, and the guy that trained me said, "It's 1031, David. It's 1031." I said, "What do you mean?" He said, "Well, you talk to 10 people, you get 3 appointments, you make 1 sale."
Yeah.
And you know what?
It still holds true, doesn't it?
True today.
Yeah.
But think about it in terms of marketing too, because you just need to get out there and just build the brand, build the awareness, touch as many people as possible, talk to as many people as possible. And in my mind, the other thing that I added, this was sort of my add to, help as many people without any expectation for anything in return.
Yeah.
So when I taught my classes, that was my attitude. I was there to help everybody in that class in some way. I was going to give them some information, give them some help that they would find beneficial. And honestly, the feedback I got was overwhelming because people were like, I wish I'd done this 20 years ago, you know.
Right.
They just didn't understand all the ins and outs of personal finance and how important, you know, planning is and getting ahead is. And they just didn't understand. So they were real appreciative. And I did help a lot of people.
Mm-hmm.
And now what I sort of want to do with this new approach is help even more people expand out beyond just being able to teach a few people in a classroom. And I want to reach as many as possible. And that's my thinking.
And that's the
part
beauty
of what
of
that's
the
sort of
new
like
medium.
And that's also sort of my longer term mission. You know, how do I want to be remembered? All that stuff they were talking about this morning.
Legacy. What's your legacy?
What's my legacy? I want to build a business that is remembered for having helped a lot of people.
So it's interesting that you say that about 1031 because I have a lot of conversations with a lot of advisors, especially young advisors, and what I'm always surprised by is how they're spending their time. And I love this notion, you know, because you really built your business like one client at a time.
Literally.
I mean, you didn't buy a book. No one just dropped them in your lap. It was show up and do the hard work. And as you and Ravi have, you know, shared with me, like there were some top ramen years where you're building the firm in this 1031. So talk about that, because I feel like in some ways that's become a lost art.
Well, you know, I was fortunate. Part of it was I just didn't know what I didn't know. I didn't know how hard it would be to grow a business. I expected to have a business that was generating $200,000 or $300,000 a year in revenue inside of a year or so. Mm-hmm. All right.
Right.
I did it in 1 year almost, but
right.
But I didn't know that was hard to do. Okay,
Right.
I didn't know that going in. I just knew.
Here's my number.
Right. I knew what I could bring to the table. I knew that I could teach. I knew that I could educate. I knew I understood the business really well because of all my years in the business. I was also very fortunate in that one of the companies I worked for I had been sort of an entrepreneurial company where they did an IPO. I was one of the first people in. I helped build the business. I had a lot of stock shares. When they did their IPO, I had I wasn't wealthy, but I had money to fall back on to use to help me start my business.
Yeah.
And my mindset was, I'm going to go 3 years. Can I go 3 years without really on my own? So in other words, did I have enough money to run the business and not take money out of the business for 3 years? That was my mindset going in. And we were into the third year, and I was we started talking, do I maybe just need to go back and get a job doing what I was doing before? Because keep in mind, I was doing really well before. It wasn't like it was a bad situation, except for the travel and the stress.
Except for my life.
Yeah,
sucked.
except my lifestyle sucked.
Right.
I don't know if I should
It's all right.
But you know, we were struggling. It was not easy. We worried, will it make it? I can remember one day I told myself, I can still remember this. It was actually really early on because I had been doing this for a little while and hadn't really gotten a client. I said, you know what? This is one of the things I've done a couple of times in my life when I just said, okay, just relax. Turn it over. Get out of the way and let it happen and relax.
Yep.
I got a new client like right away. Like the next day they showed up.
Yeah.
And it was like, okay, something you have to understand that if you're putting the right kind of energy out there, right kind of mindset, right kind of feel, and you're doing it in a way that is really going to benefit others, and that's your goal. Nothing back to me. Yeah. Guess what? The universe does for you. The universe brings it back for you.
Yeah.
And that's something I've really has been the sort of a corner point of everything that I think about and do with my business and in my personal life too. It's just relax and let life flow through you. But I also not the type to sit around and not do anything.
Yeah.
You have to take action. Yeah. You can think about a lot of things, but if you don't take action, that's one of the reasons I just decided, okay, we're going to bite the bullet here. I need to do something different. This makes sense to me. I feel like I can reach a lot of, all the pieces fell into place. So let's do this. Let's do the podcast. Let's do that radio advertising. And let's really push social media and the client events this year and see how that plays out, because I really think that'll help us to grow. Of course, then I'm planning on moving into a new office because we need to expand. It's just, so I had a lot on my plate this year. Robbie says, we're supposed to retire. Okay, so what are you doing? What are you doing?
So let's talk about that, because one of the beautiful things about, RVA is that you did found it with your wife.
I did.
And Robbie has been an integral part of the success. She's really defined the client experience. She is, has shaped in large measure where the firm is today. I mean, your desks are like millimeters apart. The woman is a saint. Like, I don't know if I'd still be married if I said that close to my husband.
I don't know how she does it either.
But now she's getting ready to retire, and so she's going to retire before you.
Yes.
Very intentionally.
Yep.
But how has that experience been? Because I think a lot of advisors, like, that is almost an unspoken benefit of independence, is that you can craft your firm to be the way you want it to be.
That's very true. I spent first, 25 years of my career, I was on the road all the time. So I was hardly at home during the week. So our relationship, was really not, it was secondary to a large extent.
You didn't have time to invest in it.
I didn't have time to invest. And so I wasn't going to bring her in initially to my business. It was really, I was going into it, and then I started to get some new cases, new business in, and I started doing paperwork. Well, I discovered, much to my chagrin, that I am terrible. I mean, the world's worst at paperwork. Everything was getting sent back. I had to do it. Had to go back to the client 2 or 3 times. Right. It was so embarrassing. And I went to my wife, who happens to be a mechanical engineer, by the way, by education. She's a brilliant person, very detail oriented. Yep. I said, can you help me with this paperwork just on a part-time basis? Well, that part-time basis turned into full-time because she did such an outstanding job. And I found out very quickly, she was so personable. Clients love her. They come to see her as much as they do to see me.
Right.
So they want to know what's going on with Robbie and where, how the kids, and, that's what they come in and talk to Robbie a lot. And sometimes I have to drag them away from her for the client meeting. Yeah, we got to get into the client meeting now. So, and they're out there still talking about trips and things and kids and grandchildren. And it's been wonderful because, she really excels at what she does with the business. I don't think she necessarily likes it, but she's really good at it.
Right. She's ready to retire.
But it's been wonderful to have that closeness with her all these years. Now, it's certainly had its challenges. I won't say that, it's a cakewalk.
Everything's perfect.
No. We definitely, it is challenging when work, and because a lot of times, unfortunately, what happens is work comes home. Both of us do. Yeah. Not just, it's both of us. Yeah. And then we're working at home together.
Right.
It's like, wait a minute, we need a break.
Yeah, let's go out for dinner. No work.
Yeah, really. So it's both a blessing because we've gotten closer in a lot of ways, and then it is also has its challenges.
And what's been, I think, important for you is that you've grown the firm, you've professionalized the firm, you've brought in a team around her. It hasn't just been the two of you tag teaming this. And as we started this, big part of your move to true full independence was around succession planning. Correct. So you have a very talented young advisor in your practice, and you've been very upfront about wanting to plan and your succession. And in some ways, it's the most obvious thing in the world, right? You're a financial advisor. Of course, you're planning your succession. This is your profession. And yet, here we are, average age of a financial advisor in the United States is north of 60, and we are still pinned. We are still pinned at only about 15 to 18% have succession plans. So where are you on that journey, and how did you come to the realization, like, I need to get serious about this?
Well, obviously, I'm for one thing, I'm turning 65 in a couple of months, so I don't even like to talk about that. But I actually have my Medicare card in my pocket now.
You're buying discounts, senior discounts.
So I'm, it's one of those things. You have to start thinking about it at some point. And obviously, Robbie's like, all we do is work. So hey, let's have some us time.
Yeah.
And right now, by the way, she is driving across country with my daughter in her new camper, and they're. I don't know
and
where
the dogs.
No, and one dog. They've only got one dog with them because my daughter has two, but they do have one dog, and just having a blast, and just sending everything work-wise back to the office. So because we do have a good team around both of us now, to where we do feel like we can step out, and not be there 100% of the time, which is great. What I would advice to advisors thinking about, when do you do that? Well, I want to tell you something. You bring in another advisor to work with you, and all of a sudden you're a bigger firm. You would be amazed how quickly your revenue goes up when you do that. When you're no longer a one-man team, you're a two-man team. We're a four-man team now. I have Mike, I have Caleb, I have John. Caleb's the young guy. Caleb's my successor because he's passionate. I don't know. I've never met a more passionate person when it comes to financial planning and getting it right.
Yeah.
He really cares.
Yeah.
And he cares about the clients, and he goes way above and beyond doing lots of I've been very fortunate throughout my career to identify individuals that in actually 3 other situations where I left firms to join other opportunities, the people I hired and trained became my successors, stepped into those roles. And actually that was by plan because I had brought people on board that I thought could do the job better than me.
Yep. Yeah.
And that had the initiative to do the job. Because I always look for that. That key thing to me is always that personal initiative. I look for that. And Caleb's got it in droves. Caroline's got it in droves. Well, the whole team does. But in 2 in particular that I've really noticed recently has been both Caleb and Caroline, my 2 youngest members of my team, that show that initiative. They go the extra mile for the clients. They think ahead to do things. Sometimes Caleb's initiative is almost overboard because it's so much. Right. Because he's all these ideas and he wants to do this and that. I'm like, so I have to reel him in a little bit. But still, he's thinking and passionate about it. And so, having people on your team like that grows your practice. Right. Because it has absolutely done that for us. But more importantly, now we're in a position that, because we act as an ensemble practice, so clients meet with I've got a regular sort of a schedule. Now I don't meet with the clients as much anymore. It's really Mike and Caleb or John and Caleb or sometimes Mike and Caleb. Just depends on who the client is as to who's meeting with them. I may come in and give an overview of things for that day or speak for a few minutes with the client just to maintain that contact. But really, it's the team running the meetings now, which is fantastic. I mean, and they do a better job than I ever did.
Well, and it's been so fun.
Because it's multiple minds.
When you made the move, when you transitioned to RFG, to watch them both psychologically kind of go through the process of we have ownership over this now. The energy level and the
lifted.
What you're talking.
Yes.
It's been amazing.
And Caleb's very excited about wanting to take on more and do more. Yep. And he's very capable too. That's the other thing. I know he can do it. So I feel really confident about bringing him on. Now, could he teach my classes? I don't think so.
It's not his personality.
That's not his strength. But he has other strengths that are fantastic. Right. So, I'm real serious about taking this to the next level, but I want to have a practice that's fully rounded, has lots of potential for growth, has a lot of opportunity to continue to grow. Yeah. I may, and I plan on interviewing and seeing if I can find sort of a sales type personality to replace me, because really my team is built, I'm the sales personality. Right. Everybody else is more nuts and bolts and get it done and provide the confidence to the client that they're getting real value, because all the stuff they were talking about today in these meetings for clients, the tax planning, the estate planning, all of that. We're doing that.
Yep.
Already have been for all of our top clients and even some of our lower tier clients. So when clients come and meet with us, they understand the value of what we're providing very clearly. They get it, and they understand how personalized it is. We block out an hour and a half for a client meeting.
Right.
Actually block out 2 hours because we like a half an hour buffer. So and we try to limit them to 2 a day so that we can give our all to the clients while they're there. And we are steady. We always make the follow-up appointment when the client's there.
You've got a real cadence for how you manage the firm.
And I don't know. It's just, I'm so excited because now I feel good about when I do step out that there's going to be a viable firm behind me. Right. And I'd like for it to keep them there. Part of the reason I didn't sell, because I had that opportunity or do one of those other options that were available to me, was I would have to give up that identity a little bit. And to a large extent, Caleb would lose out because I would be selling a part of the business or something like that. And it wouldn't give him that opportunity. Right. So I wanted to make that possible.
That there's been, we're just starting all the kind of nuts and bolts around designing the succession plan. But what I think has been such an important lesson that you have demonstrated and you have walked is the intentionality of communication. Like, you made this move very thoughtfully to be fully independent. You've brought Caleb and the rest of the team along to show them the path to ownership. Like, this is what this is what my legacy will be. This will be the springboard for your future. And in doing that, you've put your life's work in a place that can be monetized, that can you will reap the reward for that thoughtfulness.
Well, and that's part of it. I mean, I'm not totally altruistic with this stuff. I mean, I want to.
These are for-profit businesses.
Yeah, these are for-profit businesses, and one of my goals over the next several years is to really drive up my valuation of the firm so that when I step out, I get maximum value for that. Because I want to do a lot of stuff in retirement. I've got some plans, and that doesn't come. Some of the stuff I want to do is not cheap. Yep. So some of the stuff Robbie wants to do is not cheap. So I got to be prepared for that. And we want to do things like that and at the same time continue to give back and know that firm is there and continuing to help people, not just my clients, but the future clients too. Right. So the firm continues to help the community, because that's what we really do as advisors is we help our community. Right. And we give back all in so many ways. Yeah. When you start talking about helping people, individual people realize, or it's not so much realize, you help them basically set aside all of their fears and concerns and give them the confidence to know they can pursue their dreams in retirement. Right. And it could be the dream in retirement is another career. It could be something else. I've coached several clients through starting second careers that wanted to do that. That was just their goal. I've helped people retire as early as 45, and they're still retired to this day and doing extremely well. So, everybody's goals and desires are different for retirement. And then I have my other clients that have become extremely philanthropic. Yeah. And we encourage that, because we keep saying, look, you see this chart, okay? You're going to have an estate tax issue big time if you don't start doing something now, either giving to family or giving to charity of some sort. I've got clients that literally donate their entire required minimum distribution to charity now, all of it. Right. And we're not talking small numbers here. Right. Because they don't need it and they don't need the taxes, and they're like, "Mine, I can do this." I mean, I've got one client, he just loves it. He has this long list, he keeps changing it, put money on it. He just loves doing it. Keeps Robbie and the team pretty busy, but still we love being able to offer that QCD option to all our clients. That's awesome. And be able to bring them on board. So,
we'll put that in the show notes, how to incorporate that as an active part of your client experience. I want to ask you one last question before we wrap up, which is as you said, you've been in the business for a long time. You've had different careers in the business. You now obviously have founded and managed and run very successfully your firm for more than a decade. What do you think the industry looks like in the next 5 to 10 years?
As long as you are bringing value to the table, people are going to want to work with you. Okay, when you can offer value, and the value comes in many different ways. I am not at all concerned about AI or some of the stuff they were talking about this morning. I don't see that as being, people are not going to be
comforted by ChatGPT.
And there's nothing out there that can sort of incorporate and bring, there's nothing like having a team working for you to look at all the issues and all the things that could happen when it comes to managing your wealth and retirement. So I think the future is very bright for advisors going forward. I think it's huge, actually. I think it may grow because more and more people are recognizing they can't do everything, all this. Yeah. They can't manage all their money themselves. They need help in a lot of areas. They don't understand how to set up an estate plan. They don't understand some of the tax consequences that can occur when you start taking RMDs out. What does that impact? Why didn't I do Roth conversion sooner? All the little things that you may or may not be able to pick up through these types of programs and trying to do it yourself. I think the future is actually very, very bright. I'd like to grow my firm really big before I step out, and I think it's possible.
I always say we're in a bull market for advice.
I like that. Bull market for advice. I like that. That's very cool.
David, thank you for joining us.
All righty. Thank you, Shannon. Thanks for having me here today. I knew we'd have fun with this. It was a lot of fun. Thanks.
It's awesome.
Thank you for listening to the Disruption Blueprint podcast. Click the follow button to be notified when new episodes become available. Visit our website at www.rfgadvisory.com or schedule a call on our advisor resources page. And don't forget to click the follow button to be notified when new episodes become available. Content here is for illustrative purposes and general information only. It is not legal, tax, or individualized financial advice, nor is it a recommendation to buy, sell, or hold any specific security or engage in any specific trading strategy. Information here may be provided in part by third-party sources. These sources are generally deemed to be reliable. However, neither our guest nor RFG Advisory guarantee the accuracy of third-party sources. The views expressed here are those of our guest. They do not necessarily represent those of RFG Advisory, its employees, or its clients. This commentary should not be regarded as a description of advisory services provided by RFG Advisory or performance returns of any client. The views reflected in the commentary are subject to change at any time without notice. Securities offered by registered representatives of Private Client Services, member FINRA SIPC. Advisory services offered by investment advisory representatives of RFG Advisory, a registered investment advisor. Private Client Services and RFG Advisory are unaffiliated entities. Advisory services are only offered to clients or prospective clients where RFG Advisory and its representatives are properly licensed or exempt from licensure. No advisory services may be rendered by RFG Advisory unless a client agreement is in place. RFG Advisory is an SEC-registered investment advisor. SEC registration does not constitute an endorsement of RFG by the Commission, nor does it indicate that RFG or any associated investment advisory representative has attained a particular level of skill or ability.